Hello, everyone. Thank you for being there today with us. Welcome to this 17th webinar about how to deal with international VAT. I will be your moderator today. I'm Sophie Dama, responsible for export promotion for North American market at hub.brussels. This webinar will tackle the VAT issue and will help you to answer the main questions about VAT implication in international transaction, what can arise when you want to sell abroad. This international VAT workshop will be animated by PricewaterhouseCoopers. The speaker will be Emilie van der Meus, Indirect Tax Senior Manager at PwC, and Quentin Moteux, Tax Manager at PwC. And they will explain you the VAT topics in three parts. The first topic will be the introduction, VAT in a nutshell, based on 5 important questions. And then you will have a topic about transaction, local supply of goods, vs intra-community supply of goods. And the third part will be about import, export outside EU. So I will let them give you more details about those topics. But I just wanted to let you know that you can ask some questions in the chat, and you can do it in your language. If you want to do it in French or Dutch, it's okay, no problem, and they will answer you in the language of the question. So feel free to ask it in the language that's more suitable for you. Thank you very much. I will now give the floor to Emilie van der Meus, who will give you more details about the topics. Thank you.
Good afternoon, all. I maybe just first leave the floor to Quentin to raise the first question about the transaction you are performing. So I think we can just launch the first polling question. So you will see that this presentation will be, let's say, in a certain way, interactive with you. So the first question is the type of transaction you are currently performing as from Belgium. First one is only local supplies of goods. The second one is intra-community supply of goods. We will deep dive into this. So meaning all transaction with other EU countries, export, non-EU countries, or some of the above. So both local and intra-community supply, or both local export of intra-community supply and export. So you can answer this question and vote.
I don't know if you received the result already.
Yes, it's on the screen.
Yeah.
Okay, so well, interesting, because we have well, a lot of companies dealing with not only local supplies of goods, but as well international trade, so EU country and non-EU country. So let's start then with the VT insight on this different type of transaction. I leave the floor to Quentin just to summarize a bit what are the basics of VAT, how to handle with some transaction from a VAT perspective.
Yeah, thanks, Emilie. So what do we do when we always face a transaction? And sorry, it might be a bit repetitive for those who are already acquainted with VAT, but actually that's what we're doing on a daily basis, is always asking the 5 same questions when facing a transaction. And why do we do that? It's actually to be able to determine if VAT is due on a transaction, by whom is it due, and in which country will it be due. So that's why it's important to always have this kind of natural reflex, I would say, to always check these 5 questions. So that's why I'm going to give you a brief recap, not going to bore you too much on that, but I think it's all only natural to go through these 5 basic questions. So first one is, has the transaction been carried out by a taxable person? Second is it a taxable transaction for VAT? And don't get me wrong, I'm going to go through this question one by one, so I'm just giving you here a snippet at what are these 5 questions. Third one is, where does the transaction take place for VAT? Fourth one is, are there actually any exemption from VAT? And the last one is, who is liable to account for VAT, for the VAT due on the transaction? So the first one, has the transaction been carried out by a taxable person? That is the most important one, because if it's actually a transaction that is performed not by a taxable person, then it's not subject to VAT. So what is actually a taxable person? It's any person who independently carries out an economic activity, whatever the purpose or results of this activity. So what does that mean? It means that, well, not everybody, but a lot of people could be considered as a taxable person as long as they carry out an economic activity. So it could be a physical person, it could be a body of person, it could be public institution, with the exception that public bodies sometimes also have activities that they carry out as public authorities. So if you go to your municipality and you ask for your ID card, that is a mission of public interest, and for which there will be no VAT on it. So as you can see, it could be a lot of different person that could be considered as taxable person. So that is really important to first see if you're facing a taxable person, and that is to be determined based on the activity that this person will carry out. So that was the first question. Second question is the transaction actually taxable for VAT, and how can you assess if such a transaction will be taxable for VAT? Well, there are different types of transaction. The first one, the 2 most important one are, of course, supply of goods or supply of services. And supply of goods services can be considered differently depending if you have such a transaction with a company that is located in Belgium, in another EU country, or outside the EU. So that's why we're talking about either local supply of goods, an import or an export of goods when it involves a country that is not within the European Union, and intracommunity acquisition of goods or intracommunity supply of goods if it involves companies that are located in a country within the European Union. What is actually a supply of goods or services? So a supply of goods or services, it's a taxable supply which is made by a taxable person. So we saw that criteria just before, in a way made by way of an economic activity, and which is for consideration. That is really important, this last one. So you need to have a price and to be paid for the transaction that you are actually carrying out. The question 3, where does the transaction take place for VAT? That is also important in order to assess, of course, where the VAT will be due. Not yet by whom, but at least by in which country it will be due. So different type of transaction, as we said. So supply of goods or services. For supply of goods, what is important, and if you have to remember one thing of this seminar, it's really this one is, you need to actually always check the flow of goods, because it's not the flow of invoice that is important for supply of goods. It is really the flow of goods, because that's where you will have to assess if you have any VAT obligation in another country, if you do transaction with a counterparty, or if you do transaction outside Belgium. So that's always being able to map the flow of goods when you're entering into a transaction, either a new one or old one that might involve other country than Belgium. So what is important is if you have a supply of goods without transport, well, the rule is that the place for VAT to determine the VAT applicable will be the place where the goods are put at the disposal of the customer. If it's a supply of goods with transport, important is to see where the place where the transport begins, or where the place where the goods are actually installed or assembled. And of course, there are exceptions, and one of the most important one is for intracommunity acquisition. Because there the important element is actually the place. It is the VAT of the place where the goods are dispatched to, so the place of arrival of the transports. Again, here for intracommunity acquisition, I'm not going to go into too much detail for the security net because we have a whole section related to that, which we will go further into details. And which tackle all the aspects related to the proof of the exemption and the documentary requirement that you need to have in order to apply the exemption for intracommunity supply of goods. And I'm saying exemption, it's not that it's an exempt transaction. It's just that's the liability to pay the VAT is shifted. So it's not like if you were providing a loan or something like that. That is actually an activity really exempt from VAT. Here for a supply of goods, of course, VAT will be applicable, but it's just to determine who is going to be liable to pay the VAT, and for intracommunity supply, there is specific rules that we will tackle a bit later during the presentation. For imports, that is the rules to determine where the VAT will have to be accounted for is, of course, the place where the goods enter the EU, but there are some derogation rule. If the goods are immediately placed in under, well, for example, the customs warehouse, VAT warehouse, you have some specific regime that enables to delay or stop the payment of the VAT, and sometimes also the customs release. That's where I was referring to. So the exemption from VAT. What is important is that three different types of VAT treatment are applicable, and I'm not speaking about the VAT rate. So either your transaction will be considered as taxable. So VAT will be charged on the supply. We can think about local supply towards. Can you see my? Sorry. Can you see my slide here?
Yeah, we still
see I was in the wrong presentation. Yeah. Sorry.
Perfect.
Sorry. Can you? I should be at question 4 normally.
Yes, it is.
Question 4. Are there any exemption from VAT? Yeah. Apologize. Yeah, apologize. I'm in 2 presentations at the same time, so I was in the wrong one. So question 4, and that's what I was referring to for intracommunity supply. So 3 types of different VAT treatment would be applicable. So you have either taxable, what we call taxable, so where VAT will be charged on your invoice. You have what we called here on the slide exempt with credits 0 rated. So there, no VAT is actually charged on the invoice, but someone will have to pay the VAT, and that's what we refer to the intracommunity supply of goods. So it's just a sale that you will make from Belgium to France. So the invoice that you will issue will not mention VAT because the VAT that is due is actually in France. So it will have to be self-accounted in France by either the customer or the supplier, depending if it's a transfer or not. But we're gonna go back on that aspect into more details a bit later. So when we say exempt with credit 0 rated, it doesn't mean that no VAT will be applicable on transaction. It's just rules to determine who is going to have to pay the VAT. That is a bit different. And then we have the last one, which is really exempt. So there, it's for specific transactions, such as transaction that relates to the financial sector or the medical sector. there you really have an exemption whereby no VAT is charged at all on the transaction, on the supply of the goods or the services. And of course, this will have an impact on the right to deduct the VAT on the incoming costs of the company that is providing such services. So basic rule is when you have taxable activities which are not exempt from VAT, you have, in principle, the company has the right to fully deduct the input, the VAT on its costs, so from an incoming side, whereby a company that is providing services or supply of goods which would be exempt from VAT, this would have an impact on its right to deduct the VAT from an incoming perspective. And finally, who is liable to account for the VAT due on a transaction? That's your final question, one of the most important one, because there it could be either the supplier, it could be well, the importer of the goods, the customer is in specific situation. We're going to provide you with some examples in this respect, where you will see that what we call the local reverse charge mechanism is applicable. So we're going to provide you with some example, because now it's very barbaric what we're mentioning. It's going to be a bit, hopefully a bit clearer, with some examples where we'll try to explain it as simple as possible. And that is basically the decision tree that you need to have when you face a transaction in order to correctly assess whether VAT is due on a transaction, by whom and in which country. So that's the 5 questions that we always use when facing a transaction in order to correctly assess the VAT treatment that would be applicable. Maybe a quick quiz now to recap what we went through. Well, yeah, of course, wrong. There will be wrong answers, but please try to make it as didactical as possible and try to answer this. We just want to see if you're already a bit familiar with VAT. So the question is, and I do not see it on my screen, but VAT is charged on A, suppliers of goods and intracommunity supplies, B, supplies of services and intracommunity acquisition, or C, supplies of goods and services, imports and intracommunity acquisition.
You see the results on your screen.
Yes, so indeed, the correct answer is supplies of goods and services on import and on intra-community acquisition. So, well, most of you have correctly answered, so congratulations for that. So we will deep dive, of course, into the different type of supply of goods whereby VAT is indeed charged on. Let's move on the second question, I think we have. Yes. This is simply the definition of a supply of goods, to which we will deep dive. Answer A, the transfer of the right to dispose of goods as an owner. Answer B, the use or disposal of own goods for private use. Or answer C, both of the above. Okay, let's see the result. So indeed, the answer A is the right one. So the transfer of the right to dispose of goods as an owner, because the use and the disposal of own goods for private use is not really a supply of goods. technically speaking, there are some VAT consequences as well, but it's not to be considered as a supply of goods. So thanks for your participation on this quick quiz. Okay, let's move on then with the different type of transaction, different type of supply of goods. Maybe briefly on the local supply of goods. So local supply of goods, it's simply is because there is a supply of goods, but the goods are not transported outside the country. So in our case, Belgium. What is which is the place of supply? Well, this is a place where they are put at the disposal of the customer, so basically Belgium. The person liable for VAT on that one will be, basically, this is in principle, the supplier of goods, the supplier of the goods, sorry. But there are some derogation. Quentin touched upon that as well. There's the so-called local reverse charge for non-established companies. If you are a Belgian company, purchasing some goods from non-established companies, EU1, non-EU1, there will be the so-called local reverse charge, meaning that you will be, as Belgian company, liable to pay the Belgian VAT on your local purchase. It's simply, I would say, via the VAT return, it's paying the VAT, and in principle, you are able to deduct it in the same VAT return. So this is in most cases. There are also some, and maybe we can move on into the next slide. Yes, these are typically the scenario as a Belgian company from purchase size. So if you are purchasing from a supplier established in Belgium and filing periodical VAT returns, then the supplier will apply the Belgian VAT. But in the other cases, when you are purchasing, as I mentioned, to a supplier which is not established in Belgium, then you will have the local reverse charge mechanism. And then there are also other type of transaction, depending on whether you are an EU, non-EU established company, your type of VAT registration, is that a direct VAT registration or a VAT registration via the appointment of a fiscal representative? These can also have important impact from VAT liability purposes. What are the different pitfalls in terms of local supply of goods? I mentioned the reverse charge mechanism. If it is not applicable, then the risk is to have a rejection of the right to deduct by the customer, some penalties and late payment interest. And then the other way around, if you incorrectly charge VAT and you deduct it, whereas in principle the VAT should be applicable by the supplier, again, risk of penalties and late payment interest. So it's very important to map to which supplier you are purchasing. And then as a Belgian company, you will always apply the Belgian VAT on your local supply of goods to customer, whatever they are established or not, and depending on the VAT registration. So this was really in a nutshell for the local supply of goods. I leave the floor to Quentin to go a bit, let's say, far in the transport of the goods, because now we will talk about transport of goods to another member state, so the territory of the European Union. Quentin, I think you are muted.
Sorry, it's two screens at the same time. I always forget. Thanks a lot. So indeed, as mentioned by Emily, we saw the local supply. Now it's a bit different in the sense that we have another country that is involved. So if we take the example here, it's Italy and France. So you see that indeed the goods are leaving Italy to go to France. Indeed, well, there is not the legend, but basically the line below is the line related to transport. The line just above, that is not a straight line, I would say, is the invoicing flow. And what is different here? What is important, and why does it not qualify? Well, of course, as local supply of goods, because it involves two EU countries. And the thing that we do, and again, that's why the 5 questions are so important. It's in principle, place of supply is member state where transport begins. In this case, what is important to understand is that there is actually an exemption. The exemption is that if you form a supply of goods from one member state to another one, this supply of goods, which is called an intracommunity supply of goods, is exempted in the country of dispatch of the goods and will have to be taxed in the country of arrival of the goods. So that's why it's always important to keep these 5 questions in mind, because for the supplier here, the Italian party A, they will report it as a transaction, but will not have to pay any VAT on it. In principle, here it will be the French customer party B that will have to self-account for the VAT in France. What is important in order to benefit from this exemption in Italy, sorry, is that they need to have some documentary proof and some element to justify this exemption. They need to keep it, and that goes with all exemption related to the cross-boarding of the crossing of a border, I would say. So either from Belgium to another EU country or from Belgium to another non-EU country. So what is important here for intracommunity supply of goods is that they have the proof of transports to justify the fact that the goods actually left Italy to go to France, and also the verification of the VAT number of the customer. So is it a valid VAT number on the VS database? So the VS, that's the database where all the VAT number of companies registered for VAT in Europe are listed actually. So that is a public website where you can check the validity of the VAT number of your counterpart. What is important also regarding this exemption, few ECG case law well, not a few, but a lot of ECG case law were actually published on this. So which a bit framed put a framework, I would say, on how to apply the exemption and how to benefit from this exemption. So again, in order to qualify as an intracommunity supply of goods, the supplier must really transfer the ownership of the goods to the customer. It must also prove that, and again, that's what I mentioned, that the goods have been transported to another member state. It should also have a valid VAT number. The customer should also have a valid VAT number in the member states of arrival of the goods. Before that was what we call the formal condition. Now it's really a substantive condition. I'm going to go back on that because a few changes happened in 2020 that are really important actually to benefit from the exemption related to intracommunity supply of goods. And of course, the supplier may not be involved in further or in bad faith. That's a basic principle. Again, sorry, I was not showing the good slides. So that's the ECG case law that I just talked about. What are the most recurring pitfalls? Well, and that is really important. Believe me, we see that in practice every day. In case you don't have sufficient proof of transports, well, it's not really difficult. For example, the Belgian VAT authorities, if you cannot prove actually that the goods have been transported outside Belgium to go to France, they will just deny the VAT exemption and suppose that you made a local supply, which means that you will have to pay 21% Belgian VAT to the Belgian treasury on all the transactions for which you cannot produce sufficient evidence. I'm talking about VAT, but of course you get also fines and interest, and they are well, depending on the inspector, they are pretty strict there, and it really has a huge cash flow impact. So what is important, what we stress our clients, is really to be able to justify these transports, to gather for each invoice a bit the transport documentation. Second point is also, as I told you, really important. So sometimes you will report transaction for which the VAT number of your counterpart is actually not valid. That can also be a showstopper in the sense that you will not benefit from the exemption in case the VAT authority would find out that this VAT number is invalid, because that is one of the now substantive conditions to benefit from the exemption. Again, the risk, I stated it, so the VAT would be due, fine, and late payment interests. As I touched upon, so we have now a circular letter that has been published and that implement actually the quick fixes. I don't know if you heard about it, but it was in 2020 in order to harmonize a bit the rules between all the member states regarding the application of this exemption, because before it was a bit different depending on the country you were established. Now the European Commission harmonized the system and put some rules into place, among which rules regarding the proof of intracommunity transport, as well as the validity of the substantive condition of having a correct EU VAT number of your counterpart. So maybe the first one, it's really the VAT ID number. So as I mentioned before, it was really a formal condition. The ECG said if you have all the documentary proof, this is sufficient. Do not bother with the it's not do not bother, but it's not that important. Now it's really important in the sense that you need to be able to prove that you've made a check of the validity of your the VAT number of your counterpart. So it really becomes a substantive condition. So it's important to at least have being able to show in case of VAT audit that you've checked the validity of the VAT number. Can be done via print screen. It can be done via some specific tools that are available on the markets, but that becomes really an important element to justify the VAT exemption.
And indeed, we have the simple, I would say, database. I think you mentioned that already, Quentin. We have the VIS, so VIES system, which is, of course, publicly available, where you can definitely directly check the VAT number that you receive from your counterpart. So we have put a screenshot, let's say, of that type of database.
Yeah, it's really straightforward, easy to use. So you can if you don't want to have if you only have a few VAT numbers to check on a monthly basis, that is the best tool to do. You make a print screen of it when typing the number. You keep it alongside a file alongside with your invoice, and that should be considered as sufficient. Then the other quick fixes that is related to intracommunity supply is the one for the transport documentation. So there are rules that have been implemented, and two different situations should be seen, I would say. First one is when the supplier is making the transports, and the second one is when the customer is doing the transport. So the customers doing the transport is more the ex-works situation. When the supplier does the transport, you should at least have possess two non-contradictory transport documents. So a signed CMR, bill of lading, another document that justify actually the transport, or possesses one document that is still related to the transport, so the signed CMR or any other transport document, and another non-contradictory piece of evidence, which can be an invoice from your transport company, insurance policy, a dispatch of the item, or bank documents, everything that can be that can show actually that the goods have been transported from one country to another one. What is important also to mention is that there is a presumption. So what you were doing before is still okay. So here the rule just explain what was already I would say the non-written rule before, but it's presumption. So it's to the VAT authority to show that you're not able to sustain this exemption. So that's why that's what we are talking about, presumption. don't know, Emily, if you want.
These are indeed a presumption, but of course the Belgian VAT authorities, let's say, decided that the old rule, so having a set of documents demonstrating this transfer from Belgium to another EU country is sufficient. So not only one document, this is very important, not only one document is sufficient to demonstrate the transport, but really a set of documents. So it's not because you are not fully complying with these EU presumption applicable in the Belgium legislation that you cannot demonstrate that there's a transfer from Belgium to another EU country. No, you can also use a set of other documents than the one mentioned regarding the presumption.
Yeah. And then when it's export for the customer's transport, so there again, supplier should have transport certificates. Of course, what is tricky here is you're not doing the transport yourself as supplier, so you need to request it from your customers, or you get a written confirmation of your customer, which should include a set of information. So it's basically a document confirming that your customer picked up the goods. Well, the goods arrive at his place. But on this document, you should have the EU member state of destination, date of issue, name and address of the acquirer. Well, a whole list of information that should be included in this document. So that is, I would say, if you have an export transaction, that is the most tricky one. And I would strongly suggest that you review that you are actually fine and aligned with what is requested by the Belgian VAT authorities, actually.
And what we see also in practice, just one word on the written confirmation, what we see also in practice is that you can not only use the document called written confirmation of the acquired only if the customer is performing the transport, but this could be also an alternative if you do not dispose of a CMR, a signed CMR. You can also use the written confirmation of the acquired. So there's, I would say, a certain flexibility in the way you are using the different transports, the different documents. Sorry.
And maybe here we can raise the polling question.
Yeah, sure.
Regarding intracommunity.
The documents, yeah.
Yeah, documentary.
So the question is, well, now that you have a good insight on which type of documents are, let's say, required to prove the transport to another EU country, and this is also valid for export supply to non-EU country as well. The question answer A, sorry, is you have a set of documents. You have a lot of documents to prove this transfer, including, and that's more for export supply, you also have a compliant export document. This is for answer A. B, no document at all, only the invoice to your customer. And then, well, answer C, well, this is more from the logistic department of my company, let's say. I have totally no view on the documentary evidence we have in our possession to demonstrate such type of transport. Okay, this is really good news. I see that most of your companies have a set of documents. So I would say that the recommendation that would have is to have a look on your different type of transaction and making sure that the set of documents is indeed compliant with or the presumption at EU level, or of course the set of document is sufficient to demonstrate the transport. For the other ones, well, you know what to do. I would say for your type of transaction. So thanks for your answers.
So that is just an example on the Xworks transaction, so where the transport is arranged by the customer. So your customer is just going to pick up the goods at your warehouse or at your company and transport it itself. So again, really important that you have the necessary proof to justify the transport and the exemption. Again, that's what we mentioned a bit before. So if you're not able to justify the validity of the EU number of your customer, well, technically local VAT should be charged on the invoice. That is the safest way for you as a company, not having issue afterwards with the Belgian VAT authority. So if you see something that is wrong with your with the VAT number of your counterparty, it's better to charge local VAT. Now the intracommunity acquisition of goods. So that is actually the mirror image of the intracommunity supply, in the sense that if you as supplier are doing intracommunity supply of the goods, your customer is going to do an intracommunity acquisition in its own country, or the opposite if you are the customer. So what is important as general rule here, it's well, the place of acquisition of the goods and where the VAT will be applicable is the place where the transport ends. So in the example here that we made, it's a supply from Germany to Belgium. The VAT rules that will apply and where the VAT would have to be paid is in the country of the customers B, where the transport ends. And that's why Belgian VAT will be due on this transaction. Who is the debtor of the VAT is the company that is performing the intracommunity acquisition of the goods. So the one that has, in this case, the customer that is receiving the goods in Belgium, it will have to pay the Belgian VAT by a specific mechanism, because it's also not a local reverse charge this time, but it's what we call the EU reverse charge. So it will have to pay and will be able to deduct the VAT at the same time in its VAT return, provided that he has a full right to deduct the VAT, of course. Again, important to receive, even though you are the customer, it's not the rule, but it's always good to have the documentary proof to justify the transaction. Although the charge is to the supplier, it's always good that you keep this kind of information. What is important here and what we saw is that sometimes VAT is not self-accounted for on this transaction. So again, it's neutral for most of the company that have normal taxable activities, because you pay and deduct the VAT at the same time on your intracommunity acquisition. But sometimes companies think, well, not think, but they do not pay VAT because it's neutral. You still have to report it in your VAT return, and that is important, because if you don't, then you again have a risk of fine, late payment, interests on this transaction. Just a couple of words on this. So it's again a barbaric word, transfer of own goods, what we call deemed intracommunity supply acquisition. What is this? And I'm checking. No, it's not this slide. Sorry. A deemed intracommunity acquisition of goods is just when you're making a transfer. So if you are located in two countries, let's say Belgium and France, you actually only transferring goods from Belgium to France. You're not selling it to a customer. You only transfer your own goods, and that's what we call intracommunity, a deemed intracommunity supply of goods. But of course, you have reporting obligations. So if you do that, you need to report it as an intracommunity supply from Belgium, and as in your Belgian VAT return, and as an intracommunity acquisition of goods in France in your French VAT return, provided that you are in principle already registered for VAT purposes in France if you're doing this kind of transaction. So that is important. And what is also important, in order to justify the exemption, again, you need to have what we call transfer documents. Of course, it's not going to be an invoice because you're not going to invoice yourself, but at least a sort of pro forma invoice, what we call transfer documents, where it is actually stated the name, address, and VAT number that you have from in the other countries, and a description of the goods, the base amount, and so on.
And then we have I would say the mirror of this transfer of own goods, what we call also the non-transfer of own goods, non-transfer of goods, is, for example, if you transport some goods from Belgium to France to being processed, and then you know as from the beginning that the goods will be shipped back to Belgium, There's a tolerance, meaning that you do not have to report a deemed intracommunity supply to France and then again a deemed intracommunity acquisition France, meaning that you need to, of course, be compliant with all the VAT obligations in France, a VAT registration in France as well. So there's a certain tolerance. We will not go into details in that one, but there's some simplification to avoid having VAT registration all over Europe if you need to transfer some goods to be processed, for example. And then let's go to another quick quiz to recap a little bit the different type of intracommunity transaction. So this is the definition of an intracommunity acquisition. So answer A, this is an acquisition of goods from outside the EU. B, the acquisition of goods from one member state by a person in another member state, or the supply of goods dispatched from one member state to another member state. Yes, so the intracommunity acquisition is indeed the acquisition of goods from one member state by a person in another member state. So a transfer from France, you are buying from a supplier in France and you acquire the goods in Belgium. This is an acquisition of goods, so which is the mirror, not to be confounded, let's say, of a supply of goods dispatched from Belgium to France. So this is really the mirror. And of course, Quentin mentioned that on the acquisition of goods, you need to self-account for Belgium VAT and deduct it in principle in the same VAT return. Maybe just two small exercise, practical example. We have a Belgian company selling goods to another Belgian entity, Belgian company, and this Belgian company B has required the Belgian company A to ship the goods directly to a warehouse in France. So even though we're now talking about a transaction between two Belgian companies, well, do not forget, in terms of supplier goods, you need to follow the flow of goods. So meaning that B will acquire the goods in France and not in Belgium, in the warehouse in France. So meaning that the Belgian company B will need to report an intracommunity acquisition of goods in France. And of course, as I mentioned, various VAT obligation in France, VAT registration, self-account for French VAT, which will be in principle deductible. And then also not to forget to report as well the outgoing transactions as from this warehouse. So the outgoing transaction mapping is as well key. Maybe another one, practical example as well. We have a French company selling directly to a German company. But in fact, there's a sort of an intermediary step, meaning that the French company will ship the goods to Belgium to for processing purposes, and then afterwards the goods will be shipped to the final customer in Germany. The Belgian company is acting only as a toll manufacturer, so only processing the goods. So meaning that the French company will remain the owner of the goods through the whole shipment, the whole transport to Germany. So we cannot, as I mentioned, non-transfer, we cannot, think about non-transfer of goods. Why? Because the goods are not shipped back to the country of departure of the goods. We have also a flow of invoice from the Belgian company B to the French company A, which is a service, a tolling fee, because the company A will remain the owner of the goods, meaning that the French company will need to report an intra-community acquisition in Belgium, because this company transfer own goods in Belgium for processing purposes, and then a supply, an intra-community supply of finished products to Germany, meaning as well that the French company will need to be registered for VAT purposes in Belgium for the intra-community acquisition, followed by intra-community supply. And then just maybe interesting point, let's say a little bit less relating to the supply of goods, but it is very controversial in Belgium, is a principle working with a toll manufacturer here in Belgium. There's a risk for the foreign company to have a fixed establishment in Belgium. And there we entail with other VAT consequences, but this was really worth to be mentioned, because this is very controversial in Belgium for the moment. Maybe just one word, again, with the quick fixes. The idea was really to harmonize the different type of simplification. And now we are talking about call of stock, consignment stock. What is call of stock arrangements? Well, it makes, in a certain way, reference to a situation in which you have a company dispatching, transporting goods to a stock in another member state for an intended acquirer. The company knows already the identity, knows already the VAT identification number of this acquirer at the time of the transport. And this acquirer will have the right to take goods out of the stock at its own discretion, and in which time the property on the goods is transferred. So basically, normally, it entails a transfer of own goods from, well, let's take the example of an Italian company, a transfer to Germany, so meaning a deemed intra-community acquisition as well in Germany, and then a local supply of goods to the final acquirer. And basically, there's a simplification at EU level saying that, in fact, this will be considered as an intra-community supplies when the customer physically removes the goods from the stock. So this will avoid a VAT registration of the supplier in the receiving country, and there are different requirements for that, but basically the identity of the acquirer should be known at the time the goods are transported to the other EU member states. So there are, well, let's say some simplification in order to avoid companies of being registered in a lot of EU countries. Then if we move on to another topics related as well to intra-community transaction, this is chain transaction, and therefore I would I invite maybe Thomas and Quentin to launch a polling question whether or not your company is involved in chain transactions. Yes, no, or, well, a question, what are the chain transactions? It seems to be a tricky question. Okay. So interesting. So a third from the participants are indeed involved in chain transaction, which is a little bit the, well, makes the complexity of intra-community transaction interesting. And then, well, most of you are not really aware or not having the right insight of what are chain transactions. So let's deep dive a little bit into this. Well, chain transactions refer in fact to successive supplies of the same goods, which means that there are, let's say 2 in our example, or it could be more consecutive supplies, where the goods supplied are subject to one single intracommunity transport between 2 member states. So we have 2 sales, A to B, B to C, but we only have one transport from A directly to C. There are a lot of jurisprudence, case law from EU level that in this situation, in fact, the intracommunity transport of the goods can only be attributed, allocated to one of the supplies in the chain. And meaning, as Quentin mentioned, if you only have one intracommunity transaction, you only have one transaction which benefits from the exemption for intracommunity supplies. So in that respect, the transport, the allocation of the transport is very, very key in that process. In fact, each supply is to be considered as a supply of goods, but there's only one supply which will qualify as a supply with transportation. And for that, we need to take into account all the facts, contract terms, who arrange the transport, who pays the invoice from the transport company. Let's maybe take different scenarios. The first one is, again, 2 consecutive supplies. And this is the Belgian company who is responsible for the transport. So meaning that the supply with the transport is in the relation between the Belgian company and the French company. So in that respect, you will have the intracommunity supply by A to B, followed by, we mentioned, an intracommunity acquisition by B. The question is where? Well, the goods will directly be shipped from Belgium to Germany, meaning that the French company will need to report an intracommunity acquisition in Germany, followed by the supply from B to C, located in Germany, because the goods are already at the country of destination of the goods, so Germany. This will be a local supply by B to C. Let's take another example. Same companies, same countries, but in fact the transport is performed by the last, the final customer, the German one, company C. In that respect, the intracommunity transfer will be allocated in the relation B and C, so between the French company and the German company, meaning that the supply between company A and B is a local supply. The goods are not yet transported from Belgium to Germany, followed by an intracommunity supply by B to C. Yes, the goods are still in Belgium and the French company will perform an intracommunity supply to Germany, followed by an intracommunity acquisition by C in Germany. And then the tricky one, the tricky situation, and maybe just to come back on the previous one. Of course, the French company doing an intracommunity supply as from Belgium, this will entail a VAT registration in the hands of the French company in Belgium for intracommunity transaction purposes. So the tricky one is when the French company is responsible for the transport. There it depends on the contractual agreement, factual circumstances, who pays the transport invoice. So this will be really the tricky one, whether or not we need to allocate the transport to the first or to the second supply. And in any case, we have seen that in the different scenario. B, so my French company in the different scenarios, must always register for VAT purposes. Or if the transport is allocated to A and B, there is a VAT registration obligation of B in the country C. Or if the transport is allocated in the relation between B and C, then there is a registration needed in country A to perform the intracommunity transaction supply. But good news, there is a simplification at EU level. In case the transport is done and allocated in the relationship A and B, and C is held accountable for the payment of the VAT due on intracommunity acquisition, we can consider it as a, well, what we call the simplified triangulation, meaning that you will shift the VAT liability, the VAT reporting of the intracommunity acquisition, to the last company of the chain, so the German one. The German company will need, needs to be registered in Germany and will be liable for German VAT on the intracommunity acquisition. So this will simplify it and will avoid the French company to be registered in the country of arrival of the goods. Again, the quick fixes at EU level applicable as from the 1st of January 2020 has a little bit harmonized the rules at EU level, how to treat chain transaction and the importance of the concept of intermediary. And it will facilitate, of course, the transaction. So provided that all the conditions have been met in terms of chain transaction, the general rule is that the intracommunity supply is assigned to the supply towards the intermediary. So A to B, the Italian one to the German one. They also put a definition of intermediary is so the supplier within the supply chain, with the exception of the first supplier, so the Italian one in our case, who dispatches or transport the goods by himself or through a third party on his behalf. So basically, if we fulfill this concept of intermediary, the intracommunity supply will be performed to the intermediary. But there is an exception as well. Again, always exception to a general rule. As from the moment that the intermediary will provide the initial supplier, the Italian one, with a VAT ID number of the country of dispatch of the goods. So the German company gives to the Italian supplier its Italian VAT number. Then we will have the intracommunity supply in the second relationship between B and C. So these are sort of a harmonized concept to facilitate the allocation of the transport and the intracommunity supply and the exemption. So what are, well, this is the conclusion of the chain transaction. The most recurring pitfalls in terms of chain transaction is the transport allocation. To come back on the simplified triangulation, what is also key when you are working with other EU member states is that there are some member states which deny the application of the simplified triangulation because the middleman, so B, is already registered in the country of dispatch of the goods or arrival of the goods. So in member state A, member state C. So this needs also to be, let's say, monitored. Just one word on that. I mentioned that you need to take into account all the facts of the chain transaction. The Incoterms is also one of the elements. Just a quick recap, the Incoterms, let's say, put the principle in terms of which company is responsible for the cost, the risk of getting the goods from one point to another one. But they are not transport agreements. So this is very important. This could be an additional element to allocate correctly the transport. So of course, pay attention on the Incoterms used in your chain transaction. But this is one element between others to allocate correctly the transport. And for your, let's say, comfort, we have added as well the list of Incoterms 2020. Which are applicable since 2020, shifting the risk and the cost between the different parties in the chain. Then let's move on maybe into the third section of our presentation, a little bit, well, maybe more far in terms of territory of your counterpart. Now you're talking about transaction from Belgium to another non-EU country or the other way around, non-EU country into Belgium. And well, basically Brexit is certainly a good example where, well, since Brexit, UK is not part of the European Union anymore. So we are really shifting from an intra-community transaction qualification to now an export transaction. And Quentin, I invited you to, well, what are really the checklist? Shifting from intra-community to export transaction, what you need to have in mind in terms of that. Of course, we put UK, but in fact, this checklist could also be used for transaction to other non-EU countries, of course. But I leave the floor to you, Quentin, to dive into this checklist.
Yeah, thanks, Emilie. Indeed, so what is important, and again, as mentioned by Emilie, is can be done for other non-EU country, I would say, but we did it for Brexit, for the UK, because that's important in order to assess if you have obligation in terms of imports in Belgium, or in this case would be the UK. So that's a checklist that you should be doing for each non-EU country that's with whom you would do business. So first of all, the first question that you have to ask yourself is determine who is the importer. And that can be done through the Incoterms. You can have a good view already on who is going to take care of the import formalities. Because if you are considered as being the importer, then you will have to, of course, account for the VAT in the country. Well, in this case, we can say it's Belgium, so you will have to account for the import VAT, but you will also have to account for the customs duties, if any, and also potentially the excise, depending on the type of goods that you're dealing with. So it's really important that you are aware of it, because a number of formalities on top of paying the tax should be performed in the sense of submitting an import declaration and so on. So the first step is really to determine who is the importer. Either it will be you or your supplier or your customer, depending. In case you're doing business with the UK, for example, and you're acting as importer in the UK, then you should, of course, check if your company has any obligation in the UK. So based on the transaction that you're doing, do you need a UK VAT application number? In this case, we made the exercise. It's approximately 12 weeks delay on top of the regular period of time that they take to issue a VAT number. You need to have a UK EORI number. Again, for other country, non-EU country, there might be that a different process should be set up. Important there from a cash flow perspective, is it possible to defer the payment of VAT? In the UK, there are possibilities, so you don't have to pay the VAT upon importation, upon import of the goods, or upon clearance of the goods, but you can pay it later through your VAT return. We have the same in Belgium. And of course, you need to submit customs declaration, so import declaration to the UK. The reverse a bit, I would say, for the if you're doing import in Belgium or in the EU, well, you need to have a EU EORI number. So you need to obtain it. You can also check, and depending on the EU country, if there are any deferred payment mechanism for the VAT, and you will need to, of course, have an import customs declaration. What is important here, and that's what we mentioned for your checklist, if you're doing business with the UK, well, you need to adapt the ERP system, because it's no longer intra-community supply of goods, but it become, if you're doing a supply from Belgium to the UK, but now it will become an export of goods, and vice versa. So if it's no longer intra-community acquisition of goods in Belgium if you buy goods from the UK, but it's going to be an import in Belgium. And on top of that, here it's just for reference. Well, depending on the nature of your products, it might be that there are trade restrictions, such as REACH, CLP, dual use goods. So that's also something that you need to check they are no longer EU goods. So to be further certain whether or not specific regulation restriction are applicable. So that's what I said. So three types of taxes. You have the import duties. Potentially, it could be zero import duties depending on type of goods. So that needs to be checked. You have, if it's excise goods, then you might have you will have excise duties to be paid, and for all goods and services, you will have VAT to be accounted for. So again, wrong presentation. Sorry, three types of tax. So that's what I just said. And now we'll leave the floor again to Emily for the imports.
Great.
Emily, I think you.
Yeah. So definition of import. Well, probably you have now understood a little bit how it works. So importation goods are brought into the European community. There are, I would say, two types of place of importation. The first one is country of arrival of the goods. Goods are arrived in Belgium, they are released for free circulation here in Belgium, or if upon arrival on the European community, non-community goods have been placed under a specific customs procedure. So the place of importation will be, in fact, the member state in which the goods are withdrawn from customs procedure. Taking a simple example, goods are placed in a customs warehouse. We will deep dive into this a little bit later. And then the goods are moving to another EU country, still under this customs suspension regime, and they will be released for free circulation in France, for example. Then the place of importation from a VAT perspective will be France. Who can act as importer of the goods for VAT purposes? Well, it is the customer, the owner of the goods, the supplier or the previous supplier, and in some cases the consignee or the toll manufacturer as well, keeping in mind that there's some difference into the definition from a customs and a VAT perspective. And of course, import VAT is applicable because it was, as we discussed that earlier, one of the transactions on which VAT is charged. Maybe just already a quick quiz. What is an importation of goods? So answer A, the entry of goods into the territory of the community, the entry of goods into one member state from another member state, or a local supply of goods. This is an easy one, I think. So let's see the answer. Indeed, entry of goods into the territory of the community. Very good. In terms of import, what is of course important is, yes, VAT is charged, but VAT is charged on which taxable amount. And there we have some difference between the customs value. Probably you have followed the previous talks organized by UP regarding customs perspective, but now let's focus on the taxable amount from a VAT perspective. Well, it's simple. The taxable amount from a VAT perspective is the customs value, so the price actually paid or payable. But then there are a couple of elements to include in this taxable amount. So the commercial invoice will not be sufficient. The company should also take into account the duties paid. Indeed, the taxable amount for VAT will also include the foreign duties due or the duties paid upon import. On top of that, there's also the cost for transport to another place within the European Union if it is known at the time of importation. So the taxable amount from a VAT perspective is really to be monitored, that you charge VAT, you pay VAT on the correct taxable amount. a couple of now two or three interesting schemes. I will not deep diving into this, but a couple of interesting schemes linked to import and which can have a positive impact on your cash flow position. There's a specific exemption in the VAT legislation, meaning that you do not have to pay import VAT when you import goods and you simultaneously exempt this intracommunity supply. So you import goods in Belgium, follow directly by an intracommunity supply to, in our case, the Netherlands. Of course, pay attention, there's the compliance with the formalities of import declaration, and the proof of shipment, we discussed that earlier, to another member state should also be well, should also keep you should keep in mind in that respect. So in terms of cash flow, you do not need to advance to pay to pre-finance the import VAT due, which is one of the potential exemption. Another one, I think Quentin mentioned that as well, is the VAT deferment application. In Belgium, we have the so-called ET 14,000 license in Belgium, because import VAT is in principle due upon import. So at the border, you need to pay the import VAT, and then you can refund this import VAT a little bit later on via your VAT return. Here, via this license, it enables the company not to pay directly the import VAT at the border, but to shift this payment of the import VAT to your next VAT return, which is good because you will pay import VAT and you will deduct it at the same time in your VAT return. Other countries are also applying such type of deferment of payment. I think UK put that also into practice. Well, both ways, in fact, post-Brexit. You defer the payment of import VAT. So you will not shift everything into your VAT return, but you reduce the timing gap between the payment of the import VAT and the deduction via your VAT return. Another interesting things as well is the customs warehouse or the VAT warehouse. So, well, the customs warehousing is an economic customs procedure to store the goods under suspension of certainly VAT, but as well customs duties and other import-related taxes as well. Simplest form is a customs warehouse, a physical area deemed to be outside the customs territory and under customs control. A more advanced form is a complex of flexible defined physical areas reflected in authorization, older stocks and financial records. But it is interesting to suspend the payment of duties and VAT, and we have the sort of a mirror of that for goods which are already put into free circulation for customs purposes. So you suspend the payment of VAT. And then I'll leave the floor to Quentin to have the mirror transaction of the import, but then the other way around, export of goods.
Yes, thanks, Emily. Yeah, this is the last slide, so we're gonna stop bothering you afterwards. You're gonna be able to raise your question. So the export, again, a few words. So it's just the fact that you're supplying goods from Belgium to another EU country. Again, the mirror of importation. So goods are just sent outside the European community. The place of exportation is the place where the transport begins. It's a transaction that will be exempt from VAT in Belgium. Of course, you need to provide some documentary proof, so you need to fill in a customs declaration. You need to have valid export documents and a proof of transport that the goods left Belgium to go outside the European Union. Point of attention is, well, the most important one is that the exporter for VAT purposes is the one is the VAT number that would be mentioned in box 44 of the export declaration. That is, I think, the main thing that you need to take it from these slides. Now, because we asked Thomas through mail if there were any question, but I'm just wondering if you have any question, or feel free to raise them now. I think maybe you already did during the presentation. We'll be more than happy to answer them.
Yeah, well, Otherwise, we have as well our contact details, so we would be, of course, very happy to answer any question you may have after this presentation via Sophie or Thomas.
There are some questions indeed. There are 7 questions, so if we do still have time, I can maybe ask you the questions. The first one is in French, so we'll tell it in French. J'ai ma boutique en ligne et j'ai choisi l'option de ne pas mettre la TVA dans le prix. Je le ferai lors de la déclaration par la suite. Suis-je obligé de mettre la TVA au moment du check-out? Pour le moment, je ne vends que dans l'Union européenne.
Alors évidemment, là, on commence à rentrer dans des considérations qui sont plus du commerce électronique. Et donc ça, c'est vrai que nous, on s'est focalisé sur le supply of goods, disons, classique, mais le commerce électronique implique, en tout cas, et il va y avoir des changements très importants à partir du 1er juillet 2021, c'est-à-dire qu'on va avoir une forme de simplification. Donc en principe, en termes de commerce électronique, vers des clients finaux, des particuliers qui ne sont pas des business companies. J'espère que ce scénario-là vise en effet des ventes vers des particuliers. En principe, la TVA est due jusqu'à un certain niveau avec les distance sales jusqu'au 1er juillet 2021. La TVA est due dans le pays où le customer se trouve. Sauf qu'il y a une simplification à partir du 1er juillet qui permet en fait d'avoir une seule déclaration ici en Belgique et qui permet de payer la TVA dans les différents pays via une déclaration, via une identification bien particulière ici en Belgique. Donc ça, c'est à partir du 1er juillet. Donc ça, c'est, je ne sais pas si ça fait partie des présentations de Hub, mais ça pourrait être intéressant en effet de prévoir peut-être une présentation sur tout ce qui est e-commerce, parce que là, alors on rentre dans des considérations qui sont un peu plus particulières et certainement à partir du 1er juillet 2021.
Thank you. The second question is, what is the role of a VAT representative? How does it work to appoint such a representative abroad? What are the pros and cons of VAT representation?
Amélie, you want me to take care of this, or?
Yeah, sure. Please do so, Quentin.
So again, VAT representative is really, I can talk for Belgium. For other EU country, it's not always required. So in Belgium, for example, we need a VAT representative when a foreign company, not EU company, so UK, it could be UK. Well, UK is a bad example because there are currently discussion. But let's say a Swiss company that is doing business in Europe and that would need to register for VAT purposes in Belgium. They are required actually to be registered through a fiscal representative, a VAT representative in Belgium. EU countries that are doing business in Belgium and need to register for VAT purposes in Belgium can apply also this can apply for a VAT number via a VAT representative, or can be directly registered. The thing is, a VAT representative is more formalities to fulfill. You need to have a bank guarantee, but basically it's to allow a foreign company to do business in Belgium and to be registered for VAT purposes in Belgium. It can be sometimes advantageous from a cash flow perspective, depending on the transaction that you have, because as mentioned by Emily, you have the local reverse charge mechanism that is applicable. So sometimes a foreign company will prefer to be registered via VAT rep in order to avoid pre-financing Belgian VAT. But being able to apply this reverse charge mechanism. But again, it's more formalities, I would say. And if I did not completely answer your question, feel free to reach out to us by providing us maybe more information on your business to see where it could be relevant.
Thank you, Quentin. The third question is, after the Brexit, how to sell through B2C? It seems that under £103.50, you can sell without applying Belgian VAT, and UK VAT is collected in UK, but how?
So indeed, this is also the whole setup with the electronic, the e-commerce. Sorry. So indeed, there's a specific specific procedures in the UK falling under the scope of e-commerce. in case you need to pay, of course, VAT to your sales to the UK, to UK customers. Yeah.
Okay, thank you, Emily. I think that the following question is also a bit in the same thematic. What about the intra-community e-commerce B2C selling? What the VAT should be paid for Belgian goods selling to France, for example?
Yeah,
sorry, where the VAT should be paid.
Yeah, this is indeed what I mentioned. Until the 1st of July, we're always talking about distance sales. So there's a specific threshold whereby if you are not above this threshold, you can still apply Belgian VAT, or you can also opt to directly pay the VAT in the country where the customer will receive the goods. But as from the 1st of July, there's no distance sales anymore. We're talking about yes, directly paying VAT in the country of the recipient of the goods. And in terms of formalities and payment of this local VAT, there's a specific procedure here in place in Europe to only apply for one registration in one country and paying the local VAT via this registration. But I think it's very interesting, Sophie, and I hope that you will organize as well a separate session on that one, because the e-commerce is really the booming topic, especially in this COVID period. So I'm would be glad to give a separate session on that one.
Okay, we take good notes of that. We still have 3 questions. The following one is regarding intra-acquisition from Deutschland to Belgium, which VAT rate is due?
So if you're I assume you're speaking about an intracommunity acquisition in Belgium, then yeah. And Emilie, I know that you have to go to another call, so I will handle the question from here. Thanks again for the presentation.
And thanks to you all. Thank you. Bye bye.
Thank you.
So
can I continue with you?
To come back now. Yeah, to come back. So the intracommunity acquisition, if you're doing an intracommunity acquisition of goods in Belgium, I think, can you hear me?
More or less. There is some trouble.
Sophie, can you hear me?
Yeah, I can, but there is some trouble.
Sorry. I see some. Okay, so for to come back and for the intracommunity acquisition of goods in Belgium, if your supplier sends goods from Germany to Belgium, in principle, your supplier will not mention anything on its invoice. It will mention a VAT exempt and a reference to the article of the directive related to intracommunity supply. And you will have, as Belgian company, to report Belgian VAT depending on the type of goods. If it's the standard VAT rate that is applicable, so 21%, you will have to report this transaction in your VAT return and self-account for the VAT in your VAT return. So you will pay the 21% and deduct at the same time through your VAT return, of course, again, provided that you have a full right to deduct the VAT.
Okay, thank you. The following question is, as a Belgian company, if you purchase a good in China and deliver it in the US from China, do you need to declare reverse charge in Belgium?
And do you want me to repeat? To the US? No, yeah, if possible.
Okay, so if you are a Belgian company and you purchase a good in China and you deliver it in the US from China as a Belgian company, do you need to declare reverse charge in Belgium?
Again, here it's important to
Quentin, we can
see the.
There is some issue with some. Yeah.
The flow of goods. So as I understand, the goods are not going through Belgium. I'm gonna cut my camera.
Yeah, it's better.
Don't hear me? Internet connectivity. So saying, what is important is that you actually follow the flow of goods. So if the goods leave China to go to the US directly, they do not go in Belgium, as I understand. Nothing should be reported in Belgium because the goods physically do not come to them. Most probably, but again, that's remain to be seen based on the agreements and the invoice. You will receive an invoice for a sales from your supplier, your Chinese supplier, for sales on high sea, which is outside the scope of VAT, and you will make a sale afterwards towards your US company, your US clients. Again, this will be outside scope of VAT, but it's don't have enough information right now. It's better to check based on the agreements and the invoice to fully understand the flow of goods and the flow of invoices. But in principle, if the goods do not come in Belgium, you should not report them in Belgium.
Okay, thank you. We do have a last question. If the EU EORI, EORI number was made before the end of last year, should we obtain UK EORI number?
Okay, so I'm not sure I understand the question, but I will maybe just remind it. So if you're doing business importing the European Union, you need to have an EU EORI number. If you're doing business also now in the UK, you need to have a UK EORI number. This means that basically, if you're doing import both in the UK and in EU, you need to have two different EORI number, one from the UK, one from a new country. If you, let's say, if before you had the UK EORI number for all your transaction imports in Europe, this will no longer be valid for imports within the European Union because, of course, due to Brexit. So that's why when we had clients in this situation, we always mention that they should request now a new EORI number where they are importing the goods within the European Union.
Okay, perfect. Thanks a lot, Quentin, for all this information. We don't have any question anymore. So I warmly thank you for your input on this topic and for the input of Emily. And I just wanted to let know to everyone that we won't have any export talk during the holidays in the following 2 weeks. The next one will be on the 22nd of April and will be about how to manage legal risk when selling abroad. So thank you everyone for your attention, and let's meet again in 2 weeks.